We're in the middle of our summer trading season here. It's been a choppy one, just like it has for the past couple of years. Headlines out of Europe continue to weigh on the market. Stephanie, are you finding opportunities in this choppy market, though?
Yeah, we are. We're carefully selecting stocks, both cyclicals and defensive, because you really have to stay diversified. You want to protect on the downside, but you also want to participate in the rallies like we had last week.
How big of an issue is Europe going to be for the rest of the year?
Oh, I think it could be a big problem, but I think what's good is that earnings season is coming in a couple weeks, and so we'll get some color. We know it's horrible, but do numbers come down that much because of Europe? Clearly, we have been trying to focus on more domestic-oriented names, and we've added names like Disney and Clorox and Kraft and CVS because we're trying to reduce the European exposure. That said, though, Lindsay, some of these cyclicals, some of these industrials and energy stocks have just gotten hammered. So I think that's where your value is if you can stomach it, but you're at the mercy of the headlines.
Any specific cyclical stocks you like right now?
Well, we started buying Chevron last week, and I still like that a lot, particularly under $100. It's yielding 3.6%. We were buying Broadcom. We're buying Broadcom today. It doesn't have a yield, which is one of the reasons why it's so volatile. But I still think that that stock is a good one for the long term, particularly in emerging markets going from 2G to 3G. So they do participate on the smartphone side, but I think people are underestimating that the emerging markets are still behind in the smartphone upgrade cycle. So I like that story a lot. I like the valuation. Eaton is one that continues to be a favorite at 4% yield. Buying Cooper, they're doing a really good job diversifying into more electrical, late cycle businesses. So we can find value. It's just picking slowly, because on the days when the market's red, they really get hit harder.
You mentioned Broadcom. Technology is a sector that has international exposure. Are there any other names in that space that you like?
Well, we do like EMC an awful lot. I think data storage is still one of the secular growth parts of technology. But it's hard. Summertime is very hard to be overweight technology. It's seasonally, it's the worst time to own the stocks. That said, going into it this year, they've already been kind of hammered. So I think you can pick carefully. I mean, one name that we've owned in the past was IBM. Another one has been Accenture. I still like the services side of the business, software and services side. Microsoft is something that we're looking at, but it's still too high for us. I mean, it would have to get to the mid-20s. So I think you can make your shopping list, and when they get hit, I think that's when you really do want to pick and pick slowly.
And what about your cash position? What are you at right now?
So we got to as much as 25% in cash in March, and then again in early May. And we've slowly been putting it to work, again, because you've had some of these stocks that just have really sold off dramatically. So we have been adding again to the defensive, to the industrial positions and to the cyclical positions, but we also continue to buy the defensives as well. We're trying to find companies that have strong balance sheets, good dividend growth history, and really where they dominate in their industry. And so, it doesn't look so good right now on the cyclical side, but I do think that there are real values there for the longer term. And at the same time, we own more defensive, so we're kind of hanging in on the bad days.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to